Good evening, everyone, and welcome to Crypto Pulse Weekly with Dr. Damien. As usual, we go through a series of news and reviews of happenings in the markets in the past 1 week, and also we go through a review of a technical analysis and some fundamental events affecting the markets in the past 1 week. So let's get cracking as we go through our normal agenda. So we start, as I said, we'll start with market updates. We'll go on to crypto vital signs. We'll go on to crypto drip, and we'll take some questions and answers if there are any. So yeah, let's get started. In terms of market updates, we have quite a number of events that's happened in the last 1 week that has affected the price of Bitcoin and consequently the price of other cryptocurrencies. And one of them is the huge sell wall at 20,000, making it very difficult for most people to buy beyond the 20,000 mark. Also because in the last week, Bitcoin did go to all-time high, new all-time high at 19,878. So it's become a bit difficult for people to get psychologically over that. So we have a lot of sell activity going on, and we've seen Bitcoin dump as far as 17,500 today. And we've seen quite a number of movements on the downside. There are also some indications that some whales that have held Bitcoins for a very long time have also started dumping their Bitcoins because they're hoping to sell at a very high price. So that's one of the activities that are causing the relatively sharp drop in price. Lastly, we have a number of cross news and frauds that's happened as well that's affected the price in one way or the other. But generally speaking, from a technical standpoint, it is still within the bandits or the boundaries of a healthy correlation or correction. And why have I said that? If we go to technical analysis, you see that for a while now, about 3 or 4 weeks, Bitcoin had actually been overbought. So it's more or less Bitcoin cooling off from that 10-week run, essentially. So we expect the correction to play out maybe today, tomorrow, maybe some part of the weekend. There is also the possibility that there will be some spike before Tuesday. The reason I'm mentioning Tuesday is because there's this popular case of a Mt. Gox exchange that took people's Bitcoin back in 2014. Those Bitcoins were seized, and the case has been going on for a while. And there are indications that the victims of that particular exchange might be getting back their Bitcoins, in which case there are about 134,000 Bitcoins at play. So people are like, okay, maybe they're going to dump on the market. The case has never really closed, but anytime the case is coming up, people, sort of get that jitters and start selling them. So it's one of those events that are, creeping up on people's mind, and they're thinking, let's cash out before that happens. It might not happen for all I don't think it's going to happen, but let's wait and see. It might not happen next week as expected. So there was this expectation that this might happen on the 15th of December and cause the price of Bitcoin to crash. But on the other hand, if you look at the rate of institutional FOMO currently, it does suggest that we might be running out of Bitcoins very quickly. And I will explain that shortly. So in terms of regulation, France is still saying, you know what, you need to identify yourself for every crypto transaction and you need to do KYC. The US regulators are a bit shaky on things like stablecoin regulation and whether or not cryptocurrency companies should have banking charter. That discussion came up somewhere on the news during the week. Then we have quite a number of institutions lining up now to join the Bitcoin club, quote and unquote. And some analysis also shows currently that we have the lowest volume of Bitcoin on the exchanges since 2018 July, I think. So weak messages on the whole, but yeah, the correction is, from the technical standpoint, the correction of prices is perfectly healthy. Some people feel it will go lower before going up, but knowing the market, it might do just exactly opposite and just go up first before coming down. So let's get cracking. If you remember this guy last week, I was telling you about that was endorsing Ethereum as the next valuable asset after Bitcoin. If you know, Paul Tudor Jones is like is the Warren Buffett of hedge funds, essentially. So it was quoted in one Yahoo video that after Bitcoin, Ethereum is the next solid stuff, and as if it was prophesying. The Toronto Stock Exchange said they're going to list an Ethereum fund. That Ethereum fund just less than 4 weeks ago, and they've raised 75 million from investors. So they're going to list an Ethereum fund on the Toronto Stock Exchange. So they beat the US to this ETF. So before now, we had talked about ETF and probability of US having an ETF in crypto sometimes in 2021, but apparently Canada has beaten them to it now, and Canada has the ETF. It's going live, I think, this month. And they will have their Ethereum kept in custody by Gemini. Gemini is the exchange owned by the Winklevoss twins, who are like, they're not like, they actually are Bitcoin billionaires in actual sense. So yeah, Ethereum is making it big. If you have Ethereum in your bag, it might make you smile in the coming months, because apart from the whole platform upgrade and Ethereum 2.0 and staking coming up, you have this sort of things happening. So usually you say you just need one person to start, and then every other person joins in. And now that Canada has gone ahead to create this exchange traded funds, it's just a matter of time before the whole of Europe and the rest of Americas latch onto it. So good news for Ethereum there. Remember I talked about Grayscale last week. So what happened was, in the last 24 hours, Grayscale has bought, I think about, 1276 Bitcoins in the last 24 hours. And they've also started buying Ethereum. So they have about 100,000 Ethereum now that they just bought in the last 24 hours as well. And because there are whales bringing Bitcoins to institutions, Grayscale is also trying to position itself as the what do they call that word? It's the arbitrage. No, not arbitrage. Like the arbiter. That's the go between them and the institutional investors. And in fact, they just created a new advert called Drop Bitcoin. Very nice advert. Drop Gold, not Drop Bitcoin. That was advertising Bitcoin to their investors. So yeah, people like Grayscale and MicroStrategy are going full on, and they're not giving no fucks given, quote and unquote, for any other organizations. These guys, I told you about them last week, that they were going to invest $500 million in Grayscale's Bitcoin fund. In addition to that, you have Massachusetts Mutual. So this is the first insurance play in the Bitcoin space, the crypto space. So Massachusetts Mutual is a 100-year-old plus old company, and they decided that they were going to get into Bitcoin. They were going to invest buy 100 million worth of Bitcoin. They already made the purchase this week. And they made the purchase through the company called New York Digital Investment Group. These guys they're a specialized company involved in buying, Bitcoins on behalf of big institutions. And in fact, as if that was not enough, they took some stakes in that company. They bought maybe 5 million worth of shares of NYDIG. So serious ripple in the markets. And in the midst of that, you look at all the things that's going on in the background, and there seems to be some small bad news here and there. But on the larger scale, I think we're coming into mass adoption, and the earlier people realize it, the better. I don't think somebody was asking about, it was on Twitter where someone was saying, if I give you 1 million to hold for 5 years and give me back after 5 years, no interest, what stock will you buy? So a friend of mine just responded that if he was going to buy Bitcoin, and everybody started, commenting and giving their reasons. Some said they will buy Amazon shares. Some, people have different reasons. But I could reason with that guy, because if you look at the trajectory of, what is happening, everybody seems to be saying this Bitcoin is going to be 100K at the minimum by the end of next year. If Bitcoin is 100K by the minimum at the end of next year, it means if you bought Bitcoin in March this year and sold at the end of next year when it's 100K, you have made, how many X is that? 25X. 25X is actually essentially 25X, because in March, Bitcoin was 4,000 when the dip happened. And if you sell for, 100K next year, that's 25X of whatever you invested. I don't know any investment that can do that in the space of 24 months currently, except in crypto. So yeah, massive news on its own. On a good day, there was not so much institutional interest in Bitcoin. This will have made news, but there are so many of them. I mean, as I go through this news, you see that there's so many things happening on the institutional end that makes it difficult for the market to react. So, for instance, I told you about Swiss Bank and their Bank of International Settlement having a digital currency proof of concept. Now, Sweden are saying that they want to launch e-krona, and because they are almost cashless already with the use of cards and all that, they want to outpace China, and their exchange is about to provide a banking bridge or gateway for banks to link directly to crypto. So, I mean, these are huge developments in their own right, will have caused ripples in the markets. Another news is Fidelity Digital. Fidelity Digital is part of Fidelity Group. Fidelity Group's massive investment company all over the world. They have this digital asset arm that is now going to be offering cryptocurrencies as collaterals. I know I've mentioned this before, but I didn't see this coming so fast. So this was happening before. This was happening on the exchange or platforms like what's the name of this platform? Crypto.com or Celsius, where with your crypto you can borrow against your crypto, and they have a loan to value ratio of about, I think, 50% or thereabouts. So, but now these guys are taking it to the next level. They want to be able to borrow for institutional investors, one, and they want to be able to do that against their crypto assets. And they are filing paperwork with the government already to create a new Bitcoin index fund. So things are moving so rapidly. To be honest, I think 2021 is going to be very dizzying at the rate at which things are going, because everything just seems to be happening like that. So yeah, that's for the news this week. In terms of what's happening on the technical side, before we get to the technical side, just a little reminder of what's happening in the last 1 week. Overall, I think the market has lost about 31 billion because of the drop in price of Bitcoin, and same thing has happened for altcoins. But generally speaking, we're still nowhere close to even scratching the surface in terms of volume with the equities market. So this is where we are currently in terms of market capitalization across board. From a technical standpoint, this inner chart was what we showed last week, saying that we were expecting, Bitcoin to the price to either go up or come down. This is Bitcoin USD. But so this is what's happened so far now. It did go up just short of 20K, and now this week it's just been downhill practically since the beginning of the week. As at the time I took this screenshot, it was 17,903. It's bounced up a bit, but it's still sitting in, it's still currently sitting here. It bounced off this level significantly during the week, but it's currently still sitting here. There is a lot of downside pressure for Bitcoin right now because of that. But as I said, the market has a funny way of behaving. So you might expect that it's going to come down because, yes, even going by this Bollinger chart analysis, it shows that we're on the edge of the band. Bollinger chart is usually a standard deviation indicator that shows whether you are on which extreme of price you are. So on the weekly chart, it shows that we're on the extreme of price. That needs to correct itself usually. And that's probably why that's happened so far to the price of Bitcoin on technical level. But of course, there are also news that some whales are dropping their Bitcoins. Then on the daily level, you can see what I'm saying, that it makes it clearer when you see what's happening here. This was, I think, Sunday when the price was crashed. It's tried to recover like 2 or 3 times. It keeps crashing. And I drew this trend line yesterday thinking that maybe it was going to try to test the trend line. I mean, apparently it didn't even try. It was only gone down. But you see, this Fibonacci retracement, which is what our crypto drip is about today, is at 60%. 60% and 50% are usually the strongest lines of resistance on Fibonacci retracements. So if it can't break it, chances are the market is going to go back up. If it breaks it, then it will be looking around 17.3 or 17.2, which is at the bottom of the band for the daily charts, or 16.9. So, but as I said, it's anyone's game right now, because if somebody just comes and starts unloading on the market, it could push the price further. And like someone mentioned during the week, that institutional buyers now have bots that are attached to their terminals that are buying in chunks. So anytime the price dips, the bots will just kick into action and buy on their behalf. So they don't need to worry themselves about looking for, how to buy volume. And the guy's explanation was that, see, because of that, the market is not even able to dip. That usually with this kind of retracements, you might have expected like a 30% dip. But all we've had so far is barely 20%. It's not even up to 20% drop so far. So institutional investors are buying, companies are buying and putting it on their balance sheet. So don't sell your Bitcoins, please. It's a financial advice. Like somebody advised me, said if you can look for a vault to keep it, go and keep it with the bank. That it might become that important in the years to come. But this is what it looks like on an intraday level. Yeah, it seems to be in a descending channel, so to speak, and the price will oscillating between these two edges. Again, it looks more on the downside, but this line on my own chart, this line is a 200-day exponential moving average. The 200-day exponential moving average is usually a very, very, very strong support line. And the reason being that it's an average of the daily close, or the average of a close for a 200 period. So if it's a daily candle, it will be 200 moving average per day. This is a 200 moving average for 4 hours. So that's a 50, how am I saying? Sorry, I need to get my maths right. Yeah, 4 hours in a day. So the 200 moving average, yeah. So that's 4 hours in a day. So a 200 moving average is almost as almost a 30-day average of the market. So we're still above that, and the market has not touched that. If that comes close to this line, then the market is not likely to break through, because it creates a double resistance for the price to break through. And as it were, on the 4 hourly, we're already at the lower edge of the price standard deviation as represented by the Bollinger Band. So yeah, chances are we might see some correction. I mean, if I added the oscillators like moving average, convergence, and divergence oscillator MACD, it might begin to show us that we have some degree of convergence with the price action, suggesting that there might be a reversal imminent. But generally speaking, it's still anybody's game. If the technical analysis play out, then we might have a reversal to around this point, 18,008. But if the technical analysis don't pay out and some whale just comes and dumps bitcoins, then the price will just fall through. But I think the price is going up. So where are we? We are here right now. We're in the middle of belief. We're just about to get into thrill. Once you cross 20,000, then we're good. Then it becomes thrill, and everybody gets super excited because then we are close to euphoria and people are beginning to calculate how many houses they're going to buy with their crypto. So yeah, we're close, we're close, we're close. But as I always say, know when to exit the markets. In terms of crypto fear and greed, this is where we are today. We're on 89. We were on 89 last week, funny enough. But before then, we were on 92, then 86. Then we've gone all the way from 61.52 all the way back. Sorry, this 90 is out of place. Supposed to be before this one. Sorry about that. But we've gone all the way back from 48 about 8 weeks ago to where we are now. And we've been on extreme greed for 4 weeks back to back, essentially. So again, as I've said in times past, when the market is sitting at extreme greed, it's almost invariable that there's going to be a drop in price till the market corrects itself. So yeah, this is very much expected based on what's going on and based on what we know in terms of the sentiment analysis. In terms of the daily charts analysis of sentiment, you can see intraday is still sell, and even the daily now is sell. Last week it was buy, but intraday sentiment right now is sell. Like someone said, he said, don't be in a hurry to get back to buy because you're not sure that the price will drop. As I said earlier on, it's anybody's guess. The price could drop and it could still pick up depending on what happens from tonight to Monday morning. Because you might just have somebody wake up and say, you know what, I want to buy some Bitcoin and just come to the exchange and launch some big funds. And because liquidity is usually thin during the weekend, most of the institutional investors are close. The whales have more authority and power to move the markets during such periods. So yeah, that's a market sentiment. Sorry, I'm rushing through today. I sort of need to. I'm trying to finish before 7 local time, which is I think 8 in Nigeria's time. So in terms of crypto drip today, I'm talking about Fibonacci retracement. Fibonacci retracement is a mathematical based tool that is used to predict price movement of any commodity. Was discovered by a man called I think it's Leonardo Fibonacci or something like that. You can read up about it, but basically what it does is it helps you to highlight where prices might go. I'm looking for a chart to show you what I mean now so that you understand my seeming gibberish. Oh, where is this chart? Come on now. I thought I had this chart open. Oh, must have closed it. Okay. Let me look for one too. Yeah. It's a very strange feeling that anytime I have my charts running on anytime I have the broadcast running, it just takes forever to load. Like the internet is not all right. Yeah, please give it a minute to load. Yeah, I think I lost connection there at some points. Yeah, so good. So Fibonacci retracement is basically just a retracement showing where the price has been and where it's likely to be. So usually you're able to get Fibonacci retracements on most exchange charts on the left because most of them use TradingView to chart. So if you pick on Fib retracements, you select from a previous high or a recent high to a recent low. Let me go on the daily. Let me just use this. So this is a recent high and this is a recent low. What I'm trying to do is to find out the important price points between the two extremes of price in recent times. So for this Ethereum chart, I'm seeing that the recent high was 635.80 and the recent low was 480.85. So what Fibonacci retracement then does is it's a mathematical model that is almost like recurring numbers, but it's a mathematical model that shows you at which intervals the price is likely to hesitate. And because of that, it's almost become like a self-fulfilling prophecy because all the bots, all the traders, all the institutions know that, the price will always hesitate at, the retracement points or at the Fibonacci levels. So if you take a look, you have level 0 to 100. And in some charts, you have negative and you have positive after 100. So this is regarded as 100, which is 1, which is the highest point where the price got to. This is regarded as 70, which is the second point. And you can see how the price behaved when it got here. These candles, 1, 2, 3, 4, 5, 6 actually, bounced off this level before breaking through. Then it went again, 4 again, bounced off this level before breaking through. Then it tried to break back up, but didn't succeed. Then started dropping down to test the next level, which was 60%. It did bounce. You see that in reset time, it bounced off the 60%. Here, when it was trying to go up, and here when it was trying to come down, it took support on it. Then it's also the same thing around here. It's almost the same thing around here. It's not succeeded quite well in breaking through, so it's on its way down again. It's broken through, on this one, it's broken through the 50%. As you can see, the price has closed below 50%. It's tried to go back up, couldn't quite make it. It's on 30% now. So depending on what kind of asset is it, like if it was just normal currency like Forex, you would say that negative 60% is one of the strongest points. On crypto, I think 50% line, 60% is strong too, but I think 50% line is the 62% is strong. I think 50% line is the strongest. So right now for this chart, what is happening is it's bouncing off the 30% chart. So here it bounced off the 30% line. Here it's bounced off again. You can see the price shot off immediately, it got there. And here it's bounced off again. Now, this is what I'm saying about the exponential moving average, the blue line, the light blue line. The price also will tend to bounce off the exponential moving average. And if the price crosses a long-term moving average like that, it's almost a confirmed reversal of trend. So as long as these two lines are not breached till Monday, then we can say that, we expect to see some bullish showdown. But if it gets breached, then it will be the opposite. So that's on the whole what Fibonacci retracement is used for. It helps you to be able to determine where the prices will hesitate, which indicates areas of demand and supply. And based on that, you can take your trading decisions. So for instance, I could say that I'm going to wait here and set my limit order to buy at this point and set my limit order to sell at this point. If I buy at this point, I sell at this point. Hold on a second, let me measure it. 3% gain, line to line. So it's a self-fulfilling prophecy because it's almost invariable that the market will always come, when it's coming down, it's going to test the next Fibonacci level. So if you place a counter order against that Fibonacci level, the price will always try to retrace. And that's exactly what's happened here as well. It's almost gone up, but it didn't quite succeed. But in this case, it went back all the way 2 levels up before breaking down again. So Fibonacci levels are the holy grail of support and resistance because the price cannot escape from Fibonacci level because they're just there. And even the pricing algorithm on the exchanges work on the basis of Fibonacci level. So that's it from me today. I think we're done with our crypto drip. If you do have any questions, let's have it. Dr. Larry, good evening. I see that you're one of the few people that left.